Ever meet someone, like killing it financially, but their money moves make absolutely zero sense? I knew this tech guy patented some Wi-Fi thing back when I was valet parking, right? So loaded, but he tipped with like stacks of hundreds, bragging the whole time. Made no sense. Got me thinking. Knowing interest rates and spreadsheets, that's one thing. But what about like the psychology of money? Those hidden forces behind our best and worst money moves. So we're diving into the psychology of money by Morgan Housel. He says to truly master money, we got to get why we act the way we do around it.
The soft skills of finance. I like that.
Right. And Housel points out one of the biggest surprises is how much our early experiences with money, especially growing up, shape our whole financial worldview.
Absolutely. It's like we each develop a money dialect, shaped by those early years.
A money dialect. Okay, love this. Tell me more.
Think about it. Someone who grew up in, say, the booming 80s, witnessing Wall Street's rise, might have a totally different view on risk than someone who came of age during, like, the 2008 crash.
Totally. They saw completely opposite financial realities. So, what feels crazy risky to one person might seem totally normal to another, all because of the money dialects they speak.
Exactly. These differing dialects can cause huge misunderstandings, especially with family or partners making financial decisions together.
It's like trying to speak, I don't know, Italian to someone who only understands Japanese. You're talking about the same thing, money, but the words just don't translate.
And just like with languages, we might not even realize we have a money dialect until we encounter someone speaking a different one.
Whoa. This makes me think about all the money arguments I've had. We're coming at it from different planets.
Right. Housel gives a great example. People who lived through the 70s inflation. Imagine seeing prices triple when you're just starting out.
Talk about distrusting cash. You'd be all about real estate, gold, things that hold their value.
Exactly. Those experiences get hardwired into our financial DNA. And what's wild is, Housel points out, for most of human history, saving for retirement, investing in the stock market, totally foreign concepts.
Wow, yeah. We're kind of figuring this stuff out as we go, which is maybe why we make what seem like irrational decisions.
And that's where understanding the psychology is key. Because when something's so new, we can't rely on instinct. We have to be more aware of what's driving our choices.
It's like navigating a new city without using your phone, yeah. You'll get there eventually, but you're going to take some wrong turns.
And those wrong turns can be costly.
Speaking of irrational, Housel's lottery ticket example. He says statistically, they're often bought by those who can least afford them.
Classic example of how our personal stories, especially about money, can lead us to make choices that, logically, make no sense.
So someone struggling might tell themselves, winning the lottery is their only way out, even if the odds are, like, 0.
Exactly. That desire for a quick fix overrides any logic around probability and risk.
Makes me think of something Housel says about Bill Gates. You know, Microsoft Bill Gates.
Of course.
So Gates went to this fancy school, Lakeside, had access to a computer in the late 60s, unheard of back then. Housel breaks it down the odds of anyone, let alone Gates, being in that exact place at that time were tiny.
Right, and he uses that to highlight how much luck plays into success. Not to take away from Gates's talent, but to acknowledge that even the smartest, most driven person benefits from being in the right place, right time.
So we focus on the winners, saying it's all skill, but luck's a huge factor.
And the flip side, too. We see someone struggling, we assume it's their fault, but maybe they just got unlucky.
Good reminder to be a little more compassionate, right?
Yeah.
We never know the whole story.
Absolutely. Financial success, like most of life, is a mix of skill, hard work, and, yeah, a good dose of luck.
It's like we judge ourselves by our intentions, but everyone else by their, like, outward results.
And judging solely on results is dangerous. Was it a bold move or a reckless one? Sometimes it's luck that decides.
Okay, so our past experiences, even luck, shape our relationship with money. But what about the actual choices we make, like investing?
It's funny, we talk about investing like it's all numbers, but so much of it is in your head, isn't it?
Totally. And Housel says one of the biggest mental blocks is focusing on the negative, like potential losses, worst-case scenarios, even when the odds are you'll be fine.
The allure of pessimism. Housel uses this great story about Jeremy Grantham, big-time investor. In 2008, during the crash, he goes on this book tour predicting doom and gloom.
And he was right. Right, economy tanked, market crashed.
Yeah.
But wasn't he saying that stuff for, like, years before?
Exactly. Grantham was sounding the alarm, but it was only when things got bad that everyone was like, oh yeah, he called it.
Like, even a broken clock's right twice a day, as they say.
Precisely. Our brains pay more attention to bad news even if it's less likely to happen. Negativity bias.
So how does that play out in our lives, this negativity bias? Not just like doom scrolling the news.
When do you check your investments? Big market gain or after hearing about a drop?
Okay, yeah, way more likely to freak out when things are down.
There it is. We overestimate how likely bad stuff is because it grabs our attention, gets us emotional.
And that makes us do impulsive things like sell low when we should hold or...
Exactly. Fear makes us do things that hurt us long term. And the flip side, it can make us so risk-averse we miss out on good opportunities.
I gotta risk it to get the biscuit, as they say.
Exactly. So how to counteract that? Housel says focus on the long game.
Easier said than done when your portfolio is doing the roller coaster, but...
For sure. But historically, the market goes up over time, even with the dips. Another thing, control what you can control. Not the market itself, but how much you put in, how it's spread out.
So not timing the market, which seems impossible anyway, but having a strategy and sticking to it, even when it's bumpy.
Because it's time in the market, not timing it, that matters.
That makes me think of another point he makes, how we perceive the economy affects things. He uses this alien example, right?
Okay, this is a good one.
So, alien visits Earth in 2007, sees our cities, technology, everyone's doing all right, pretty impressed.
Not a bad year to visit, yeah.
Exactly. But then, this alien comes back in 2009, financial crisis, same city, same tech, but now everyone's freaking out. Economy's in the tank, right? Alien's confused.
Like, wait, did you forget how to use all this stuff?
Right. Nothing tangible changed. Factories were still there, people still had skills. It was the story we told about the economy that flipped. Went from housing safe, Wall Street's genius, to full-on panic.
And that panic, that loss of confidence, it had a real impact on everything.
It's wild how much our beliefs shape our reality, especially with something as big and messy as the economy.
It's huge. We got to be aware of the stories we're buying into. Are we being overly optimistic, ignoring risks, or, like we said, too pessimistic, letting fear stop us from doing anything?
It's that balance between, like, rose-tinted glasses and thinking the sky's falling every day.
Exactly. Realistic optimism, seeing the risks, but not letting fear make the decisions for you.
So negativity bias is one side. What's the other extreme?
Housel calls it the end of history illusion. Like, we've hit our final form, our goals, our desires, they're fixed.
Oh, yeah. I've definitely fallen for that one.
Happens a lot, especially when you're young, aiming for milestones. Hit this income, buy a house, get that promotion, then you'll be happy.
But you get there and?
Goalposts have moved. On to the next thing, never satisfied. Or sometimes you hit the goal and it's not what you thought it'd be.
So how do we avoid that trap? Making choices for a future you can't even predict.
Build in flexibility. Question your assumptions. Be open to changing course. Your values, what matters to you, they will change, and that's okay.
Don't be afraid to, like, rip up the script if it's not working anymore.
Exactly. Life's a marathon, not a sprint. Our finances should reflect that.
It's like they say, best time to plant a tree was 20 years ago. Second best time is today.
Exactly. Never too late to adjust to make it align with who you are now.
We've talked about negativity bias, the end of history thing. Any other mental traps to watch out for?
Oh, for sure. The big one. Looking for shortcuts, get rich quick schemes, all that.
The allure of the free lunch.
Exactly. Housel uses buying a car as an analogy, pay sticker price for a new one, find a deal on a used one, or try to steal it.
Not advocating grand theft auto here.
Definitely not. But the point is, in investing, we often want the reward without the risk. Guaranteed returns, trying to time the market perfectly. But as Hal says, the market hummels everyone eventually. There's a cost to playing the game.
No such thing as a free lunch.
Right. Don't think of risks as fines for messing up, but as fees. It's the price of entry for what could be life-changing returns.
Like Disneyland's expensive, but worth it for the experience if that's your thing.
And speaking of changing how we think, Housel challenges the idea that emotions are bad for investing.
Really? I thought you're supposed to be all detached, logical. Mr. Spock with a spreadsheet.
That's the classic advice, but Housel says it's okay to love what you're invested in. It can even be an advantage.
How so? I figured being emotionally attached would make you make bad calls.
If it's just hype, then yeah. But if you genuinely care about the companies, the assets, believe in them long term, you're less likely to panic when the market dips.
So if you're just chasing the next hot thing, you bail when things get rough.
Yeah.
But if you're actually invested, you ride it out.
Exactly. Like being a bandwagon sports fan versus a diehard who's there through thick and thin.
And that loyalty, that belief, is what lets you stay invested for the long run, which is usually how you win in sports and money. So how do we build that kind of connection to our investments? Not just stocks, but the whole thing.
Be more picky about where your money goes. Don't just follow the crowd or the hot tip. Learn about the companies, what they do, their goals. Do you believe in it?
Make it about your values.
Exactly. Then those market ups and downs, they're less about fear and greed and more about being part of something bigger.
So not outsmarting the market, but getting it, aligning yourself with things you actually back.
Exactly. Which leads to another thing Housel emphasizes, humility.
Humility.
And
Isn't finance all about confidence? I know what I'm doing. Energy.
you'd think so. But Housel says real wisdom is knowing how much you don't know.
Okay, I'm listening.
Yeah.
How does being humble make you a better investor, though?
Start with accepting you can't predict everything. No matter how much research you do, there's always something you miss, something that throws things off.
So how do you prepare for the unexpected if you can't predict it? Sounds like a paradox.
That's where humility helps. Don't assume you have all the answers. Be open to new info. Admit when you're wrong. Be ready to change your approach.
Be a student of the market, always learning.
Yes. And be okay with not knowing everything. Because with investing, like life, the only constant is change.
Okay, so humility.
Yeah.
How do we actually use that day to day with our money?
Diversifying investments helps.
Don't put all your eggs in one basket. Classic advice. But Housel takes it further, right?
He talks about avoiding single points of failure, not just in your portfolio, but your whole financial life.
So multiple income streams, different skills, even your network. Anything that contributes to your financial well-being.
Right, like a safety net if one area of your life goes sideways. And a big part of that is a solid emergency fund.
The emergency fund. Everyone says it's important, but it's hard to actually keep it funded.
It is. And Housel says for him, saving isn't always for a specific thing. It's knowing that cushion gives you options when you least expect needing them.
Like having a spare tire. Never want to use it, but man, are you glad it's there when you do.
Exactly. That peace of mind, being able to handle whatever comes up. Housel argues that's the real reward of mastering the psychology of money.
And that leads perfectly into the last part of our deep dive, where we'll talk about how understanding this stuff can actually make you happier. Okay, so we talked about negativity bias, the end of history illusion, looking for shortcuts, even a little bit about humility. But how does knowing all this actually help our finances?
It's like you can read a map, but that doesn't mean you know how to drive. The real magic happens when you use that understanding to make choices that actually line up with what you care about.
So less about becoming some money-obsessed robot, more about knowing what makes you tick when it comes to money.
Exactly. Housel argues that real wealth isn't the number in your account, it's the freedom and control that money gives you.
Yeah, I get that. I definitely felt richer with less money when I had more control over my time, my choices.
Exactly. And that's why figuring out what enough means to you is so key. It's not about keeping up with anyone else. It's what do you need for a fulfilling life? Not getting sucked into always wanting more.
Breaking free of that hedonic treadmill thing we talked about.
Yeah.
Always chasing the next level, never satisfied. It's like that saying, the richest person isn't who has the most, but who needs the least.
100%. Finding contentment in what you've got, but still having goals, right?
It made me think of how Housel talks about America being obsessed with financial freedom,
Yeah.
but we define it so narrowly.
Retire early, hit this net worth. That's the usual, yeah.
Yeah.
But Housel says, think bigger. What does it really mean?
So not just quitting your job, but
Yeah.
having the power to design a life you actually want.
Yes. Pursue your passions, spend time how you want, make choices that reflect your values, not some arbitrary income level.
It's about options, feeling in control of your time and energy more than anything.
And that kind of freedom, it's not something you buy, but money can make it a lot easier.
Like they say, money can't buy happiness, but it can buy a yacht big enough to park right next to it.
Right. Sometimes close enough is good enough.
So how do we actually do this? Bridge the gap between knowing ourselves and our money and making that lead to a good life.
Start seeing your finances not just as numbers, but as tools. What are you trying to build with them?
So not just saving randomly, but what kind of life do I want and how does this money get me there?
Exactly. Saving for a house because you value stability, investing in learning new skills for a career you'd love.
Or maybe it's early retirement to travel the world, whatever gets you going.
It's about your values. And when you do that, managing money becomes less about what you can't do and more about the power you've got.
You're investing in your future self, the one who's going to look back and be like, yeah, I did that my way.
Couldn't have said it better.
Well, on that note, that wraps up our deep dive into the psychology of money. Any parting wisdom for the listeners?
Just this. How you are with money, it's personal. No right or wrong answer, but by getting the psychology of it, you make smarter choices for your finances and for the life you want to live.
Great advice to end on. And for our listeners, if you're looking for a guide to navigating this whole money thing, the psychology of money, check it out. It's a good one. Thanks for joining us on this deep dive. Until next time, keep the conversations going and keep learning.